Hey everybody, welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all again on this lovely Wednesday. It is Wednesday, my dudes. So we're still looking at this scenario developing this week, right? We got a short week still ahead of us. So although yesterday felt like a Monday, it was in fact a Tuesday. We did get that downward scenario that I was looking for coming in earlier to the week. We did consolidate in a way that certainly has me optimistic about the continued potential for a decent upsize move. I should say a decently sized upside move is what I would like to say. Heading into the middle of this week, may start to see something develop like that today, maybe into Thursday's price action. A part of this is the main part of this will be predicated on the degree to which we get some buying pressure here that will generate the type of upside momentum that we'll need in order to see that kind of fuller upside move develop. So we're gonna break some of that down a bit. I'll walk you guys through why I'm still looking at that, why I think we could still some of that and still see some of that, and what that kind of has to do with our our current price positioning, our current kind of technical outlook, and what we have heading into February OPEX, what I think is probably a most likely scenario for that. So let's hop into it today. Before we get started with our analytics, of course, big thanks go out once again, Super Mega Ultra 7. Thank you so much for my coffee today and for supporting this newsletter and video. And of course, as always, to Dat Scruffdo, Ken Wedmerlin, thank you both as well for helping offset some of my data expenses. None of my content is monetized. Everyone who has contributed has done so purely out of their own free will. There are no paywalls. I do no premium content. I make everything available to everyone. So everyone who has contributed either in the past, who contributes on a regular basis, or who decides to sponsor, buy me a cup of coffee and sponsor one of these newsletters. Just want to say thank you so much, of course, for helping support me in my mission and supporting the rest of the GameStop community with our with continued research efforts here. So thank you very much, sincerely. So cool news yesterday that definitely did play into some of our price action. We saw Ryan Cohen come out and announce along with the company that GameStop is going to go ahead and sell their French operations through Micromania and their Canadian operations through GameStop Canada. And this is real, right? This isn't necessarily, maybe it does coincide, right, with a with a Ryan Cohen kind of TA thing, right? This is merger and acquisitions related. So maybe he's saying, right, if we look at his tweet in particular, if anybody's interested in buying GameStop, and I could be overreading this, right? I'm trying to think with how the tinfoil way of looking at this would go. Is this a signal? Do we go ahead and buy here? Is he pointing out, we got something coming out here, especially based on the things that I see on a regular basis, technical analysis wise. We love to speculate. It's fun. It's fun to do, to put on that kind of mode of thinking. Obviously, I'm not going to overcommit to what I would speculate with respect to these tweets, but it's not just a tweet. It does coincide with some material information from the company. We do have an 8K here. With the sale of these operations. So this could potentially mean, right, essentially what this says to me, and I'm not surprised, maybe based on how things have gone in terms of, I guess, tax policy or orientation towards businesses, kind of how maybe this is stirred up in part by what's going on with tariffs. Ryan Cohen, of course, seems to have been, politically on board, more, politically and economically on board with what, the Trump and Doge and kind of American Renaissance kind of reform team for this kind of 2024 post-election cycle, right? He seems to have been on board with what's going on here, and not so much on board with, I suppose, what Canada and maybe to a lesser extent what France. I mean, France, I kind of see as perhaps I don't know to what degree that's roped in with the Canada stuff, or his comments about wokeness or whatnot, but that may just be a part of kind of the ongoing backing out of the EU market that is just no longer profitable for for the legacy business itself to kind of move away from these assets that are just not offering returns. So interesting to see yet another phase of the Ryan Cohen sort of trim the fat. I have this kind of fat on my mind from what was running around today. There's like a clips of Kevin O'Leary, right, Mr. Wonderful, over on over on CNN, and CNN's kind of offering like, hey, well, does it make sense for Doge like to cut these jobs? And Kevin O'Leary is just like, whenever you're taking apart a business, you need to cut 20 more people than 20% more than you think you need to, right? Like you just want to think of that thing as just like, a fat chicken. I kind of lost it today, like thinking about Kevin O'Leary. They're just a fat chicken just dripping with fat, and you want to cut it. You want to cut it out 20 more percent than you thought. There's just like the CNN hosts they got to go bring up this clip. Maybe we can bring this up during live stream this week. But like, and the CNN hosts are like, what about people with the nuclear codes? And they're like, cut them off. Just Leary's going nuts. But in any case, right, this is the same spirit. And this seems to be a kind of extended spirit of the moment, right? A kind of zeitgeist, right, for our German friends. I know we have quite a few German and Austrian listeners, maybe some Swiss too. I don't know. Do Swiss people care about GameStop? I don't know. Maybe they should. they should with the failure of Credit Suisse. Maybe UBS as well. We'll see. But in any case, right, Ryan Cohen definitely has been for some time now on board with this. Trim the fat. Tidy things up with the legacy business as much as possible. Turn it around, right? Remove the kind of liability from here, and this just seems to me to be another phase of that. Insofar as kind of cutting the fat goes, and preparing for whatever is the next step, the transition there. So, all humor and kind of speculation and news related stuff aside, we'll see this did have an impact on our price action. But let's hop into our analytics to see what we can do to kind of forecast what's coming up today. What situation we're looking at here. Market context, kind of more of the same. We did shoot down pretty quickly as soon as the market opened yesterday. Flirted with crossing over the gamma flip line before then, also inexplicably in a few minutes, kind of launching back to the upside, almost to our opening price over on SPY. Picked up back almost to all-time highs, right? We got all-time highs pre-market, logged all-time highs almost again, got almost back to all-time highs here over in the overnight XO period. We've traded down a little bit, but we're still above that prior call wall. We're still in call gamma dominant territory. Again, as long as we stay within that call gamma dominant territory, then the broader market is offering stability, offering something of a slow grind up with our call wall, our new call wall up at 615 as a proximal overhead target. So we're still looking at that same kind of situation as far as February. Bullishness, stability, optimism is concerned. March still looking like maybe a little pessimism, bearishness. We do have mid-March, right? We do have another Bank of Japan announcement coming up, and it is thought perhaps they'll up their interest rate by another 25 basis points. Meeting's going to take place on the 18th and the 19th of March, 2 days before March OPEX. So perhaps that is something responsible for a bit of this bearishness. Keeping this in mind again for February, right? We're still looking at optimism. We're still looking at kind of sticking in this range. We have a lot of call gamma up here in the 610, 615 range. We have gamma flip line is right around 609. A little bit of volatility picks up there, but then 607, 608 are not crazy volatile. 606 not crazy volatile. So I would put our volatility trigger way down there at about 605, and it's even not that strong, right? We do have some speed bumps kind of below us. If we do really move down for some reason, then maybe 602, 600 will kind of, especially 600 will kind of pick up. 605 maybe a little bit, but still kind of looking like stability, trading up in these kind of upper, like close to the 610 range. Maybe we do finally log a new all-time high intraday, right? We haven't done it yet on the daily charts. We've just been doing this after hours or in the overnight exto period or in the pre-market period. So very interesting to see us do that kind of trading at that point and then kind of teleport down a few dollars and then trade at that kind of lower range, and then just before the end of the day teleport up and then trade back basically over that call wall, that or not over that call, over last week, over our kind of our previous call wall of 610. So kind of interesting to see that play out. So while that occurs, while we're in this range, that certainly projects stability, good context for something like an upside move to emerge in GameStop. Still looking at that, still watching whether we're going to get this third periodization in this kind of micro bull trend we're looking at here to play out. Yesterday's price action, was basically what I was looking for, right? Traded down off the open, held pretty stably above that 2650 mark, moved down to where those, I think, our 104-hour moving average, 50 and the 104-hour moving average were. So, came to within a few cents of that. The 54-hour moving average, especially because that's synonymous with this kind of lower band of our current bullish sub-regression channel, which we'll take a look at in a second. And then started to move up. Very interesting kind of, I wonder if there was some strange things kind of going on pre-market. This almost looks like, a pretty, this is a V-shape, right? V-shape down pattern, V-shape recovery here on, pre-market action into the open and then out again and then down again. This kind of zigzag, right? This says to me, these types of patterns say to me, injection of a lot of short liquidity, right? Injection of a lot of short shares to kind of move the price like this. Especially with the kind of, when it's jagged like this, when we kind of see this zigzag, where we don't see it like clearly playing off of any moving averages, it just kind of, pivots and then, moves on a straight line to a set price point and then moves on a straight line back down, kind of like this sort of says, kind of shorting action or something like that to me, short covering or short closing, and then, shorting once again. So that looked like that to me. We did end up seeing short liquidity contract a bit. So pre-market, basically in this area, this time of the day, yesterday pointed out, saw about 3.2 million shares available to borrow. That number as of pre-market today came down at certain points to about 2.4 million, certain points 2.5 million. I would say most of the time it was sitting around 2.6 million. So yeah, that's a contraction of about 600,000 shares. That's notable. That doesn't mean that shorts are moving into a liquidity crunch like they were back in early January, but that is an interesting contraction. Something to note. That does suggest to me that a decent number of shares were used to control the price yesterday when you see a fluctuation that big. Of course, Ryan Cohen's tweet and the company news did cause this pretty big spike here. Interesting to see that kind of play out on our chart, looking at how kind of momentum was recovering, and sort of we looked maybe like we were going to settle into this kind of tighter VWAP channel here, and then that almost that really kind of blew us up a little bit, up across that 2750 level. We continued basically on this kind of trajectory, almost undisturbed, this kind of diagonal line moving up through here, and then kind of just reversed for no reason. Although MSM did take the opportunity to say, because GameStop is looking to sell its French and Canadian assets, traded down, as they often do, right? That's how they want to talk about that. Looked like shorting to me, but I can't tell for certain. Somebody else pointed out there were a very large number of dark pool orders that were routed to that were at the ask, I should say. A very large number, maybe 10 orders in excess of about $250,000. So that were routed toward dark pools. That came in at the ask. So a lot of authentic, that's that kind of strategic order flow rerouting that happens at the same time, right? So you don't have to do as much shorting. You can short and you can send those bigger ask orders over to the dark pool, and then basically, do your kind of FTD stuff with respect to meeting that ask volume, right? Meaning that buying demand. You can do that too. So, again, don't need to speculate endlessly about exactly what caused this price action, but this did look like a fair bit of control. This is not primarily an options market and kind of day trader driven price day, is what I'll say. We don't see these V-shaped zigzags kind of just kind of in open space if it's really traders who are mostly driving our price action, as opposed to larger institutions that are attempting to keep the price contained. That's my outlook anyway from what I'm looking at here. Yeah, IV came down. It spiked very early and then came down a decent bit, but it's still up as compared to where it was toward the end of the week. Options volume, it looked to me to spike bearish kind of only as a dog pile on this movement. A little bit of bearish stuff here, bullish here, but then this movement had a lot of sort of short. This area had a fair bit of kind of short call trades, dog piled, especially out toward March OPEX, actually March 21st. Here's our short liquidity chart. Technical wise, okay, what am I looking at in terms of what am I looking to see here in terms of a possible continuation of our current, of our current technical paradigm? Something like this, something like today. This does look like if we go down and we touch this level today, that under any typical stock showing this pattern. Without kind of any additional material news. We did just have this sale news, but it doesn't look like it's done much. Certainly if you zoom out on our 4-hour chart, this would be a pretty strong signal for traders to go ahead, enter this position and kind of swing this as preparation for a continued move up. A check at this resistance level to see if it would kind of move back up into maybe this kind of 30 area, which, as we'll see from our gamma data in a second, is a possibility. I'm not going to rule it out this week, though, we'll have to see the right number of factors to see that emerge. Right, we do have a number of technical markers here. We've got our 100 4-hour moving average coming in here. We've got our 50 4-hour moving average coming in here. Again, as I mentioned earlier, synonymous with the lower bound of this kind of bullish regression sub-channel. Overhead, we've got at around 28. It is a bit lower now, 28.24, but around this 28.50 level, right? We've got the 200 4-hour moving averages, something of an overhead resistance. It might stop just before then, depending on the degree to which. Well, as we'll see in a bit, that $28 position does have a lot of OI. Does have a lot of calls, does have a lot of call gamma concentrated there under normal assumptions that would offer a lot of resistance to the upside under the conditions that if we assume that it is a primarily trader long call position, it means that traders are long gamma and long delta. At that strike, it means that dealers are then have a substantial amount of negative gamma and delta on their books. And as that price point, especially gamma, right, as that price point is approached, as that $28 level is approached, dealers are going to hedge that position first, right? As it's approached, they will hedge that position by buying shares. But as it is just about to go in the money, they will suddenly flip to selling shares as gamma values max out. So, right, gamma values move up, 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 up. It's asymptotic. Exponential growth up to when the strike goes in the money, and then it's exponential decay as it comes out of the money. So it's an inverse, goes the other way. And so that's when you get that kind of selling pressure then, right? And you'll see this, right? So the effect is you'll see kind of buying pressure move up, smack into a wall, and then scrub, right? So we see this scrubbing effect. That scrubbing effect at those levels, that is typically the result of market maker gamma hedging occurring at that level. Sometimes Vanna hedging if it's a put wall, but we don't usually see that on GameStop. Usually it's gamma hedging, key gamma levels. You'll see the scrub either as a support or as an overhead resistance. So you can, when you're looking at the charts, you can see what that looks like. You can point that out. So yeah, if we do kind of consolidate in this area, yeah, could definitely see this move. It doesn't have to be huge. It could be a couple bucks, but this kind of upside move from the 2650 area, where we kind of are now, up back to the kind of 28, 28.50 area. That would be our kind of first kind of bump, especially with the 204-hour moving average kind of coming in here. That'd be our first kind of check. And then, depending on the degree to which we do have continued momentum, we do have continued buying pressure, we could, if we kind of crack through there, we could go up and test our call wall. But I think we get hung up here. First, that's certainly the more conservative scenario. I think the likelier scenario, if we do I mentioned this yesterday, if we do log a lower high versus this previous peak, I think out of February OPEX, that then potentially spells another kind of test of the 200-day moving average, which served as a support back here. So we'd kind of get this, whoop, we go up and then kind of move back just kind of into the tail end here of this bearish regression macro channel, and then kind of more definitively start to move out of this early March as we move into that 2-week earnings appreciation period. So kind of move down, flatten out last week of February, first kind of OPEX of March, and then Richard Newton's been talking about us having a potential swap roll date of around March 11th. We'll have to see what that looks like. Right? Ultimator just came out with the Swapinator, right? So something that is his own indicator that has been designed to be able to detect swap roll dates on the daily time frame. So very interesting, very interested personally to start to maybe use that tool to evaluate this the swap theory that Richard has spent so much time building through his research and through what he's worked on with his spreadsheet. So very interested to see that, certainly heading into early March. But I think generally what that says to me is potentially looking at that first couple, that sort of last week of February, first week of March, more or less being kind of range bound to slightly to the downside on a kind of another test here of this kind of deeper support. So, but we'll have to see. At the same time that I think we are set up pretty nicely to have this kind of decent size up move. Always important to remember that there is a fair amount of short liquidity out there. If institutions are particularly at this point for some reason that unbeknownst to us, that they do want the price to be controlled and they do want to see the price move down, and we don't have, they can use that short liquidity in order to go ahead and achieve those ends. There is enough liquidity, short liquidity out there for them to do that at this point. The risk would only then be, what that means for them on the backside and how they have to deal with settlement issues and strategic fails to deliver and the like. So just, putting that out there, as I said here, right, the chance for this type of action, this kind of shorts come in and kind of teleport us down, although I'm not seeing any particular reasons why we should expect that this week. It doesn't mean that they can't do it. So, the chance that it could occur is therefore not zero, and never zero for any point at any point this week. Options activity, not a ton of stuff very interesting for us heading into this, besides that kind of March 30 trade, mostly at the bid yesterday. Puts mixed, but really very few. Calls, expansion of OI, again, looking like mixed bid to ask trades pretty evenly. Difficult for me to tell then, right, where this new OI is coming from. So kind of the default assumption under those circumstances is that it's default trader long and dealer short. So hard to know in particular. But interestingly, we did see max pain bump up to 26.50 between yesterday and today, heading into the end of this week. So typically that's a bullish sign, right? Bullish to see max pain come up a bit, even if it's just a little bit. Maybe that points us to the idea that, hey, okay, maybe something's going on in the background. If the options market is kind of forming to prepare for something of a higher close heading into February OPEX, we will have to see. We'll have to see what plays out. In terms of what we're looking at gamma exposure wise, right? So 26, we remember we did see a pretty decent number of short puts come in at that level. So that is trader short puts. So traders are positive gamma, which means dealers are negative gamma and delta at that strike, which means counter to what is often assumed. If that position is approached from above, it's going to offer a slight, it's not a very big position, so slight amount of support um, from dealer hedging, which is usually not how puts work, right? Because typically traders are long puts rather than short puts, and so dealers are typically selling shares at that as that strike is approached rather than buying them. Not the case here, so we do have that slight little bit of support below us from where we are kind of in this 2650, 2675 area here pre-market. But as you can see, we have a lot of call gamma built up overhead. So, we do have this, it's all stacked, it's pretty dense. We do have some positions that are larger than others. But basically, if, some institutions want to come in, or if there's some kind of catalyst going on in the background to kind of light this off, and this starts to pick up momentum, if this gets ahead of steam, like there is a lot of dealer hedging that will pick this up as these calls, you know, start to right. So yes, gamma values like at 28, right? So like as you think, okay, well, this is kind of resistant to a certain amount of buying. Yes, it is, right? But of course, as this strike is approached, as intraday 27 gets approached, yes, there'll be some resistance at 27, but above it, right, we have the 27.50 and the $28 position are very large. So the gamma values here are going up at the same time that they would be going down at 27. So because these positions are larger, same thing actually with stuff up here, 28.50, 29, and 30, gamma values are going up. This amount of change in gamma is actually going to overpower the change in gamma to the downside as 27 goes in the money, right? So if you get enough buying pressure, 27 gets overcome, it kind of pulls it up, pulls it up, pulls it up, pulls it up. And because we have so much gamma, right, so much call gamma up here at 30, there's a lot of pull basically until you get up into here. And then not a lot at 29.50. And then basically 30 kind of gets so right as it's about to go in the money, it becomes resistant. And then traders flip the other way and you can run back down. So if we can get something like a head of steam here and institutions are not interested in trying to, put a lid on the price, I don't know, maybe we get another company announcement or, I don't know, Roaring Kitty tweet or something like that. Yeah, this sucker just pops off and we see $30. So not saying that's necessarily going to happen, right? This is not trade advice. I'm not telling you to go buy calls. I'm not telling you to go, not at all, right? This is for educational and entertainment purposes only. But if you do see something like that, if we do end up seeing this price action take place, right? It's important, I suppose, in trying to understand what really guides our price action on a regular basis. This is the type of thing that can really, this is what drives that. So this kind of has the looks. It could be a little bit better, but it's right, really tight cluster. We're positioned right at the bottom of it. Somebody lights a fuse, off goes the powder keg. Kind of a situation, and it gets more sensitive later into the week we go. Very interesting on a short week to see this pop out. Wednesday, getting close to an OPEX, but the idea here is if we do have this powder keg situation, you're thinking, okay, what happens here? How if as you as a major institution would want to make the most money off of this, um, you know, you might want to set this off a little bit earlier so that you can walk the price back down, or because market makers would like to walk the price, dealers would like to walk the price back down into OPEX, that they will fight to keep the 30s and the $28 position is very large out of the money, so that they do not have to continue to deliver on share obligations and into the next week, and actually don't get to profit maximally off of their short options dealer strategies. You might want something like that if you think that's going to be inevitable. If you think it's too tempting for someone to come in and set that off, you might want to be the one to set it off, and you might want to do that toward the middle of the week so that you have time to walk the price back down, to make it easier for you to have 2 trading days, have just like last week, right? 1 trading day, well, 1 after hours period. You let that thing go off in the after hours, you can walk it down, you can do whatever, you can mess with it in the overnight exto period or something, and then open. Okay, it opens at 28.50, but you've got a whole trading day to walk that sucker down to 26.90, so you can close at $27 on the nose. Maybe you want to do something like that this week, bump up from the kind of 26.75 area run up to 28.50, and then then you've got a full data to kind of walk it back down to where your max pain value is sitting. Something like that, right? That's again speculating, but it's speculating on the types of moves, right? If I were in institutional shoes, if I were trying to make the most money as possible, knowing what I know about how the options market is structured, knowing what I know about what has worked for me in terms of trading, right? I mean, I use these assumptions. Part of it is I use these assumptions to guide my trades. I try to anticipate, like, okay, what price action this week is going to be in the market maker's interest the most? What is going to be in options dealers' interest the most? And more often than not, that ends up with trades that should not be as probabilistically in my favor, based on kind of the pure theoretical probabilities that are offered by brokerages, by brokerage calculations, right? Way more frequently than should be the case, end up working out in my favor when I guide my own trades off of these types of assumptions and these types of sort of attempts to anticipate what types of occurrences would be in institutional or market maker interest based on reading some of this gamma exposure. IV still low, like, kind of grinding here down, not quite down to 52-week lows, like we kind of touched over on Schwab for a little bit. We do have a little bit ways to go there, but it is pretty low, right? This is one of the low. This is kind of early October lows, kind of late August lows, just like we saw basically heading into last week's volatility on Monday and Thursday. We're a little bit higher than that, but sky's the limit, right, when it comes to GameStop implied volatility. So this is set up in a way that if institutions did want to run this to the upside, if they've been picking up options, they've been picking up, they've been building out long positions, long call positions on the cheap, if that's what they've been doing in the background here. So definitely don't want to get too over enthusiastic about this, but that's certainly possible. So that's what I'm looking at. Some things I'm looking at, right? Basically on the very short term, looking on the bullish side, kind of on a longer term, right? Some of these longer time frames, we're still looking on the bullish side. It'll be a case of, can we kind of get these time frames? Do these time frames start to sync up? Do they start to link up? And when they do, right, if we can kind of get that harmony playing out across multiple charts here, that's going to be something that's going to look like to me as a signal that we're kind of clear to get some of that upside, that upside realized, right? That upside momentum realized. So nothing to do at this point, but just kind of get out there and open our eyes and see what we see in our actual price action. So thanks very much, everybody, of course, for watching and listening. As always, I hope you found this helpful. Please keep comments, questions coming over on X and here over on YouTube. Always wonderful to talk to you guys. I couldn't do any of this certainly without this being a two-way street, as far as having people to talk to and basically express my ideas and sort of go through this stuff and ask questions. So keep it up. Always love making these for you guys, and of course seeing your appreciation as well. So thank you so much. Look forward to seeing you guys tomorrow, and hey, good luck out there. Take care, everybody.